ACDC for one day. If that's a
on your
possible
gentle
thing.
Sunday night. Who's on Football Live tonight? Not your guys.
Actually, here in Los Angeles, the Rams are hosting the Tampa Bay Buccaneers, Tom Brady's old team or second team. My team won. The Packers won today, so I'm a happy camper. Unfortunately, unlike you,
I've just been through a roller coaster of a sporting weekend. I got back from Perth last night after, Test match cricket's supposed to last for 5 days. It was all over in 2, but the good news is I was there for both days. I feel sorry for the guys flying from all over the world with day 3 tickets because it's an empty stadium.
What happened? So, did they refund you for day 3,
Yeah,
or like how does that work?
They all get refunded. I mean, it's a bit like tariffs, right? It's the local economy in Perth was expecting 60,000 punters on Sunday, Monday, and Tuesday. I mean, that's a lot of refunds, right?
A lot of beers that aren't going to be sold.
I don't think there are any Lutnick sons taking cuts on the refunds. They're just it's bad, because everyone, everything from the caterers and suppliers and everything else. I mean, it's crazy, right? You've got a major sporting event that's just sort of been cut short by 60%.
I mean, look, it's maybe a flaw of the rules of the game that you don't know how many days it's going to go for.
Well, the thing is, this format was the original format, but what's actually happened, because they've brought in all of these short formats of the game, which has really changed the players in terms of how they play. They play sort of aggressive, fast moving cricket, which, if applied to a test match, just ends the whole game so quickly. I mean, it was pretty reckless stuff, but it reminded me a bit of markets. It was a classic, we're so over, we're so back, we're so done type of roller coaster over the course of.
Which is exciting. Speaking of so back, the Bitcoin's up $7,000 since the low. Although it's down $1,000 since the U.S. Open, but a little bounce. Finally got a bounce. It took a while to get that bounce, but it finally got one.
Listen, I think what would be useful is to start off just in terms of what we've been kicking around in terms of the collapse in Collateral. I'm going to be using your chart on the Collateral collapse in my start of the week note that goes out in time for sort of 7 a.m. Eastern on Monday. But I think you've got that ready to share, haven't you?
Yeah, there you go.
You got a chance to air it before I steal it wholesale for my start of the week note.
before you just
it's already.
I like that chart. I think I'm going to use it. It's like, I haven't even published it yet, but it's yours, buddy. God knows there's so many charts I've created that I never even put out.
I love having a chart bitch on the team. So walk everyone through this, because I think some of these numbers are staggering, right?
Yeah, I mean, so just thinking about like these numbers, right? So I was like thinking about the size of these numbers, and everyone wants to say, hey, there's more money, but we're still down in the number of, like, if you look at the other deposit liabilities, which I like to think of as kind of the true US dollar money supply, it's like 16.2 trillion. Total deposits in the US commercial banking system are like 18.2 when you add in the other large time deposits. Yep. They're all down since COVID still. So if you use a strictest, like, what is the US dollar, like, measure of cash, like, we haven't really gone up that much. So that kind of tells you there's like a lot of leverage that's built this animal to where we are. So
and what does leverage require? Leverage requires collateral, and
yes,
and we've just lost a fuck ton of it, right?
Yeah. So let me like give a little backstory for the viewers of like, I was talking to my partner who also has a big crypto fund, and so if we rewind back to the 2022, and you had this a true deleveraging event, like, and like this
Yeah,
one, and Luna was a big token. It was one of the biggest tokens at the
yeah,
time, and I think about 85 billion or 100 billion, somewhere in there. But what happens, and I think a lot
yeah.
of people
Mike Novogratz got a tattoo of it on his arm, if you
did. That
remember.
was unfortunate. That was unfortunate timing for him. And it's like when you get your girlfriend's name in high school and then you gotta like change it because you got a new girlfriend or something. Anyway, sorry, we're divesting. So when you saw that, everybody's using that as collateral, and then on exchange is leveraging. Then when you have a collateral, like essentially evaporation. Now again, this is also what happened to GFC. This is just a normal how deleveraging works. Then it just boom, and so you had the initial crash, and then it was weak for a while. And so if you go back to October 10th or 9th, whatever it was, you had that day where there was just huge liquidations across crypto. Like,
Yeah,
some of the tokens were down 60% in a day or something, right? So that was your deleveraging of like huge deleveraging event. So all the
yeah,
guys with most extreme leverage got taken out. And I was talking about this. And I was like, look, cryptos are short for a while now because I've seen this. It will bounce back a little bit, but you don't get like a re-up on your equity book. Like, oh, here's some more money to go punt with. You know what I mean? Like, and so when this collateral is like same with banks, right? That's why they have to protect their capital and why they don't like marking stuff down.
yeah,
And then basically we've been weak and weak and weak. Now, the one thing I would say is that I was blown away by the number. Now it's up 150, 200 billion off the lows, which I don't
yeah.
know. I think this was on as of
You did
Friday.
this on. I think you
I
prepared
did
this
this
on
over the
Saturday.
weekend. I think the Bitcoin number was what it was yesterday. So
Yeah,
this is already added back some of the loss from the 8180 level. But $1.5 trillion is a lot of collateral. And then you think about that, right? And I was like, all right, let's look at across the board and see like since the October highs. Now gold hit the high earlier and then dropped 10%, and now it's gotten a little bit back, but 2.5 trillion in gold, add in another 200 billion in silver. Equities is like 4 trillion. Bonds pretty much hung in there, a little bit in credit.
yeah, and also just to interrupt there, right? During the bond crash of 22, we saw a drawdown of 3.5 or 3.6 trillion. Just to put this nine in perspective, right? That felt like carnage in 22. And in the space of what, 6 weeks now, 5.5 weeks, we've seen a 9 trillion hit to global collateral, right?
Yeah, I mean, I was going through all the different periods, like the whole COVID loss in equities was 10 trillion. 22 was like 14 or 13. So I mean, to lose 3 or 4, or to lose like 3.5, 4, depending on where we're at, because I know SPOOs are up just a little bit now. Like, that's a lot of money for just a 5-6% drawdown in the S&P. The Bloom. I'm using the Bloomberg market cap, like U.S. market cap. And so again, remember, this doesn't also include rest of world. South Korea's down. We shorted the South Korea. We used the EYW at 102. I think that was at 89 or 88 on Friday. So that's down 12%.
Yeah, I mean,
China's
if
down
you
11%, right? Like,
it's a beta thing, right? I mean, what's been hit hard is high beta stuff, which you'd understand in a liquidity trade, right? Makes perfect sense. If you look at developed markets ex-US like IEFA or the MSCI EFA as the ticker to look at for ETF in ETF land is IEFA. That's actually only marginally down since these October highs. But if you compare in emerging markets, the Qs of EM, which is EMQQ, versus the low vol high dividend EM play, which is DBYE, that's been a relative hit of about
Yeah, I mean,
16
here's like
percent.
a list, and I'll make it a
Yeah,
little
that's too
bigger.
busy. That's too busy to share, Benny. No one's going
I'm
to
going
see
to make
that.
it a lot bigger so you can just focus on the right, on the left. All right, so there you go. That's easier to see, right?
Yeah, yeah,
So if you go since this is organized since the 28th, I mean, so MicroStrategy's down 40, Bitcoin's down 25, China's tech is down 11, US tech's down 10, 9.5. Whereas down here, go to the other side of it,
yeah.
you got XLV's up 6, gold and silver have rebounded, energy, and so the IEF bonds are kind of flattish. Like, so it's definitely, I mean, yeah, industrials are down 3, banks are down 2.5. So yeah, again, to your point,
Yeah, you have to be a bit wary of XLI. It's got some weird names in it these days.
but these are the
Uh,
golden baskets, and you can see it also. And
yeah,
the extremes are here. This
I
is
mean,
like all the Bitcoin miners. They're turned into LLM power
I
names. Here's your
I hate
uranium
how
stocks, number 2
I
worst
know.
loser.
It kills me. Having been an AI bear for 2 years, I'm still getting hurt by my uranium miners. They perform worse than neo clouds.
Yeah. So the most short, non-profitable. I mean, what you would think, right? And then you go
Yeah,
down the list, and it's like, okay, bond proxies, financials, biotech, energy. It's actually pretty funny. Levered E&Ps are having themselves a moment. But but part of this can be also is that some of it's defensive and some of it's just guys are unwinding, right? So the
yeah,
stuff that people were short to buy these things, and that they're making a lot of money doing that, So
yeah. Well, listen,
I
let's play it forward, right? You started you the first thing you said is that you know that crypto deleveraging probably gives it an open season to be on the short side of anything sort of high beta in the near term. Um, what does it take to turn this thing around right now? I don't think you're going to get anything sort of Fed speak wise that is going to cause a massive reversal in risk appetite from here.
well, we got Friday,
Right?
so as you know, I rebought the SOFR Z5s, a lot of
Yeah,
them. And I own the H7s also. And you get
I'm
like
still in the
magic.
H7.
Williams comes out Friday morning and says, hey, thinking about cutting in December, right? Which has been my thesis that they would force their hand. And then the odds of a December cut are back to 70% to 80%, roughly in there. But here's the thing. If the stocks rally, I wonder if SOFR will come off some. Like, you know what I mean?
Don't we have a couple of inflation prints this week as well? I mean, that could send us in the opposite direction, though.
Isn't it September inflation,
We've
though?
got we've got PPI on Tuesday, right? No, that's in.
But
Yeah,
I
that's
thought
in.
that they said they're not bringing out October CPI.
For some reason, on my calendar, we've got PPI for Tuesday.
Look, it's all backward looking. I mean, we just lost 9 trillion of collateral. That's a massive amount of money destruction. Any way you look at it, it's deflationary. Like, like the reality is that US equities like just dropped 2/3 of what the Fed's balance sheet is. Just put this in perspective. Okay.
Yeah.
Like, US money supply, depending on how you want to do it, like 16 trillion, full M2 is 22 trillion. So 4 trillion is 25 to 16 to 25% of that. Like, you just got to put these numbers in perspective when you think about the Fed balance sheet. So the key would be, hey, you got to get the leverage machine working again, right? So the leverage machine needs lower rates. So they're just going to keep cutting rates. I mean, more or less. But the risk is if the leverage machine gets going again, then your weak dollar, like rest of world, gold, that whole trade that I think people are excited about, if you can get the credit machine. But right now, there's no credit demand. I mean, that's the reality. You're seeing credit issues in private credit. You're seeing destruction in the most leveraged stuff. And you're seeing, again, let's go back to this chart real quick. You're seeing The stuff that,
Walk,
like,
people through the labels there
I
because
mean,
it's
it's
quite hard.
basically what we just said. This is just a
Yeah,
visualization of it versus the number. So you saw
yeah.
here's on the 28th when we had the big earnings,
But it's everything in
Miami
S&P.
Fed
It's
meeting,
everything in
Miami Fed
S&P
meeting.
terms.
This is when the Fed said, "Hey, I'm Jay Powell. I'm going to go out with my guns blazing, and for whatever reason." And slowly and surely, you started to see this erosion, and so this stuff's starting to get bid, and this stuff's starting to get
Yeah.
sold. And these are, by the way, this is relative to S&P. Okay, so these aren't the
Yeah, yeah,
actual.
no, that was what I was trying to point out. Yeah,
Yeah, yeah. This is the relative to S&P chart versus the actual numbers. And so S&P is down 4.5, but Bitcoin, is down 22 relative to it. That's it. That's the extreme right now. But then, we just saw all the other names that I was talking about, that your uranium miners, anything that's levered to the AI capex cycle, they were down similar, right? So I think it's the most speculative stuff just got the air, got the what do you call it? Rug pull? Rug pull?
I think they call that the cool kids call it that. Yeah.
Yeah, rug pull. So I don't know. I think if you're sitting in bonds, or you're sitting in healthcare, you're sitting in staples, you don't really even notice anything that much. If you're sitting in, so it just
Well,
matters where
actually,
you're positioned right now.
sorry, you're sitting in a lot of stuff, right? I mean, the point I was making, and I'll put these charts in my start of the week note, and I'll put it in the free section of it as well. I mean, actually, you know, it's only very specific parts of the rest of the world trade that got hit quite hard over the last 6 weeks, right? I mean, Korea is an obvious place to pick on, right? 22% Samsung Electronics, and then another 8% with Hynix, right? It's an AI trade in an ETF, right? But elsewhere in EM, yes, the China the Chinternet stocks got hit, but that's a classic high beta crowded trade. Um, you know, regular defensives around the world have been fine.
Yeah, I mean, and so I think the question that everybody probably wants to know, because it's easy to look backwards, is what's the playbook for the
Yeah,
rest of the year? More importantly than just being Nick Timros, the reporter. Um, and I guess I think it's weird week 2 for this, because it's
short week.
Thanksgiving here in the United
By the
States.
way, just for everyone, we're not doing a show on Thanksgiving Day. You guys can
Yeah,
stuff
we're
your
gonna
face.
we're gonna we're gonna take the holiday and give thanks for the start of the Benny and Squirrel show, and quite a crazy 2025. But I don't know. What's your gut say? Like, how do
Listen,
we end this year?
the question is how are people doing right now? Now, looking at indices does not necessarily translate into global P&Ls, right, for actively managed money. And I get the sense that your average active manager or long short hedge fund guy is looking at these indices and going, well, yeah, really, I liquidated in the April lows, and it's taken me a long time to strap that risk back on. So I imagine, and we've seen the recent data, that most people are behind. And the question is, do they sort of try and consolidate for relative survival, or do they, strap on some risk and pray for Father Christmas? Um,
I mean, I think
just anecdotally, I'm getting a bit of both right now.
like, look, the spring here. Let's go back to that. This is the same chart I did, but I just moved it back. This is from February 18th, and then this is Liberation Day. So you saw like the deleverage blow
Yeah,
up. Bitcoin kind of led there too, but it kind of, relative to the S&P, it kind of stayed steady. It was like the
yeah.
S&P was rolling a little lower, whatever, and then the real carnage was here. So my guess is is that it's like this. This week, I have no clue. It's a holiday week. It's been an intense sell-off and all this stuff that we just highlighted. Um, Again, like Bitcoin's massively oversold or was massively oversold. You just got a 10% bounce off the low. So, I mean, that's a pretty big bounce, right? And
Yeah.
remember, the one thing about these things is the first bounce is usually the sharpest.
Yeah.
And then you'll run into some resistance levels. And then if you can't get through it, you just start fading again. So, maybe it's just kind of wait and see a little bit, but like I think it'll be like this is like if these guys are serious about not cutting, then this thing will sell hard, basically. So maybe this Fed meeting will be the equivalent of okay, so February 18th to April 2nd was how many days is that? That's 6 weeks. It would be about the same, to be honest.
Yeah.
Like, you know what I'm saying? Like this was February 18th to April 2nd. Then we got the more sharp part, and then in Q4 18, actually, let's look at that. Let's look.
That's your model, right? I mean,
Go ahead.
yeah, just go from October 18 to Jan 19, right?
01, 04, 05. Yeah, whenever they dragged him out of there and was like, oh, I guess we're not raising rates anymore.
You need to stop it before COVID worries start, right?
All right, so this is actually interesting, right?
That's really interesting. That is really
so
interesting.
This Bitcoin was a different animal back then, but you see very similar underperformance. And remember, the red is the S&P. The rest of them are relative. Tech kind of hung in there.
What happened after that was this sort of lunatic rally in risk assets, just as the stories were emerging out of. Actually, no, wrong. No, yeah, okay, no, that's fine. That's the right place to be looking.
Yeah,
I was getting the COVID year wrong.
Yeah. This was the Fed meeting right here, and then you saw this so we were at right there. So it was down at the Fed meeting. It was down 5%, even though it felt kind of ugly that fall. And then you went down 10% fast, right? So you had, and this all the way to Christmas Eve. And that's why I always like to joke on Twitter or when I'm writing and talking is like Jay Powell stole Christmas. So the question is, will you have?
I mean, one thing we should say, just because this might be feeling a little bit misleading, Bitcoin was not an institutional asset in Q4 18.
No, that's what I started off with.
And so actually quite be interesting just to see the spread without the blue line. I don't know how easy that is, and I don't want to mess you up.
Hang on.
Yeah.
But I'm just saying, it's kind of interesting that's how that blue line looks right now, though, also, when it isn't.
Yeah, no, it is. It is. Although, I mean, we had a very different universe of traders around the asset at that time.
Totally agree. I just thought it was interesting. There you go.
Yeah.
Tech was cheap back then.
And actually, you had a massive sort of relative outperformance of tech. Wait, this is interesting because I would say back then, large cap US tech was a defensive in a way that you really can't say that they are now with what they're doing. Very different. Yeah,
I mean, you can see it right there, right? The S&P underperformed this. I mean, if you think about what was really getting hammered, it was anything.
Amazon was Clorox. In late 2018, Amazon was Clorox, right? that was where you ran to hide. So outperformance.
Apple and Microsoft were like 12, 13 times earnings in the Q4 18. Google, I mean, they were cheap. That was the last time tech was cheap, was this period right here. And it's actually interesting doing this analysis of running back and seeing how tech actually outperformed in that period. So yeah, it's not a perfect analogy to your point. Like right now, tech is so big.
The other thing I'm looking at is the gold move at that point, right?
Gold and treasuries.
Yeah, gold and treasuries, but I've got my gold hedged at the moment through to Jan OPEX right now, and I'm just looking for I'm looking for the sort of the starter pistol to clear some of those hedges. I'm not ready to do it yet, but if we do get increasing signs that there's going to be a blink and a cut and a more sort of dovish signal from the Fed, I may take off that hedge this side of Christmas.
But yeah, I mean, if you just look at that though, tech and Nasdaq divided S&P and tech divided S&P down 3 and 7 over that Q4 relative, and then but the S&P down 14 because I think it started October 1st. I just moved it back just a little bit, but
yeah,
the same things are trading well. Stables trade pretty well, gold trade pretty well, treasuries trade so, and Bitcoin trade terribly.
Yeah, I'm definitely with you on this Q4 analogy. I think it's the right one to be looking at.
Yeah, and so I'll take this off. So that's it. I don't think. I mean, this week again. Your guess is as good as mine. This week I don't know. I think tomorrow's whatever. But if you see it starting to like stall out, I mean, they'll probably keep. It'll probably just keep going. Like and again, they need definitive like. Hey, we're going to keep cutting. We're going to do maybe a 50 is going to be on the way. This kind of thing. So
I'll tell you what I mean. What is live over the weekend? Obviously, we've got all of this, all of these developments around Russia, Ukraine, and the 28-point Russian authored peace plan. One of the parts of my portfolio that got absolutely wrecked last week was the European defense stocks, and it started to trim. They've been one of my biggest winners of the last year.
They've been a good trade. That was a great trade.
Yeah, but I just wonder if the events of the last few UAs might make some of those sales look slightly premature. Certainly something I'm going to watch once Europe gets open later on.
I mean, here's crude right here. Doesn't look good.
Yeah, but yet the energy stocks look fine, right?
It's very strange. I mean, well, to be fair, nat gas prices are pretty high. Like nat gas is kind of been good, but yeah,
you won't be affected down in California, but all of the analogs for a very cold winter is starting to kick into place right now, according to my weather gurus. My weather guru Sean Hackett is the one I follow from Boca Raton. I've got
been for oil. Jesus.
Yeah. Really has.
And that's actually, it's good to talk about that for 1 second. I had talked, I don't know, maybe like in September I was getting on this and I was talking about the 4 horsemen of reflation, and weaker dollar was a big one. Vol selling and declining correlations and vol index vol, and then you had oil, and then you had basically all these things one by one going away essentially, right? And then the final thing is this AI capex. So dollar's been strengthening as dollars have come home.
Yeah, but just on the dollar, I was having a look at that again this morning. I mean, so much of the DXY move has been a weak yen move, and you've got a new PM.
But it's against everything. I put that chart up last week. It's the only currency that's actually doing. The only 2 currencies are really doing well against it recently. Like the euro's hanging in there, but it's still 3 or 4 big figures off the high. Brazilian real and the Mexican peso.
Yeah.
But it's not ripping. I'm just saying it's not helping anymore. That's a fact, okay? Like the dollar's not helping risk assets and global monetary.
No, take that. Yeah.
Yeah.
So what were the other horsemen? What were your other horsemen? We did oil, dollar. What else?
And then basically the AI thing, like that,
Yeah.
the AI, if that's now getting in question, and we see, which we've talked about, we don't have to go into too much. So everything we've just seen with credit markets and CoreWeave and Oracle and Meta, and just basically like, hey, CapEx can be up year over year, but it's going to be at a decelerating rate. And then 27 CapEx numbers are going to get called into question, because if you don't start to see an ROI, and this is how the markets are reacting to the current state of outcomes, that you could see 27 get cut, and maybe that's part of what the market's doing right now, is it's repricing 27. Does that make sense?
Yeah, I mean, I haven't looked at that part
No,
of
no. I'm
the
just I'm just saying that
yeah.
without I don't want to.
The narrative makes sense. Makes perfect sense.
And so, you're basically and the volatility has stopped going down. Implied correlation hit the floor. That's been rising. So, like, basically the major drivers that drove this massive rally, right? Like all timer, like, rally from 4,800 on Liberation Sunday to, I don't know what the exact high was, but just a shade under 7,000, right? Like, I mean, that's heady
Yeah,
stuff.
but back to looking forward again. I just don't know how much of institutional world has caught that, right? Um, you know, we had the whole narrative about retail being the smart money now, but they got seriously over their skis coming into Q4. And I do think in terms of the share of that collateral destruction is disproportionately towards retail hands, like
Yeah,
for like.
I just think the curve had steepened a bunch, and then it's kind of come in, but it's the 210 stuck pretty steadily between 45 and 55 here for a while, and I think that's what the Fed's like. We talked about the financials. I think the Fed's stuck on that, where they're trying to protect the banks. They want to keep a somewhat steep yield curve, and if they let the forward curve start running in front of them, it's just going to happen fast, and then people
Yeah.
just going to buy duration, and then we talked about the gamma squeeze potential in that part of the curve. I mean, look, I looked at the flow of funds data, Rupert. U.S. households don't own many bonds. So, they own a lot of stocks. So it wouldn't take a lot for all of a sudden people to be like, you know what, I'll buy some bonds. You know what I'm saying? Like that if you started to get worried that we're going to go into a multi-year, like there's not going to be a bid like there was, bonds will look real good, or staples, or that's, and look, that's what I think when you see the defensive trading like they are, until you see something that's a re-leveraging event, I don't know
I need,
how.
yeah, I need to see. I mean, listen, the trade I've got my eye on is a flip from short high yield to long high yield. But I need the spread event to put that trade on.
Yeah, I sent you this article this weekend. These private equity
Yeah.
guys are starting to tap that market. That's exactly what you want to see. But I mean, I don't know. Like, here, check this out. I'm just thinking about like how far we've come. Just look at the Qs, right?
Mm-hmm.
In the dark period of Q4 22 to the beginning of 23, 266 Qs. What do we peaked out 640. So we had 50 points down, and we hit this, started to hit the trend lines. I think this is the level. I think 540 is the level. I think that's will be the let's see what they want to do at 540, which was the pre-liberation peak.
Yeah.
And, we'll see where everyone's head's at. That would be a good, decent correction of what, 10, 15, 18%, something like that. But not that big when you go off how high we went.
Yes.
Like that. If the former peak was the new the new support, that could be very bullish for like it's like, hey, we took some of this air out that we got ahead of ourselves, kind of thing, right?
Yeah. Okay. Well, listen, that's all I got in terms of smart plans for this week. My inclination is to sit on hands with current position rather than actively try and press this. you know, I wasn't surprised that Friday was kind of meh. But I think this week could be really quiet.
Yeah, look, they could. You'll know, right? If you see it stalling out, and I think the thing to do is watch this. For example, on Thursday, I was like live tweeting. I started the day, and we had the SanDisk short on, which was an all timer. That was the only thing red on my beta list of high 55 stocks. Then one by one, there was like, oh, now there's another one red. Then another one red.
Yeah.
Another, and then all of a sudden the whole board was red, right? Like so. You need to look at, again, the JP Morgan, the NVIDIA, the high beta. Like the S&P is not going to give you the answer, basically, is all I'm saying.
Correct. Absolutely.
All right.
All right, Benny. Well, let's wrap it
buddy.
there. And we will see everybody next Sunday night, right? So at the end of the Turkey weekend. My Black Monday.
Yep.
All right.
Thanks, buddy.
Cheers. Take care, Benny.
All right.